Thanks for tuning in to the weekly news recap. We begin this week with Kanye West stepping into crypto. Musician and entrepreneur Kanye West has launched a cryptocurrency called the YZY token, also branded YZY Money on the Solana blockchain. The token surged 881% within 10 minutes of its debut, briefly reaching a $3 billion market cap before retreating to about $1 billion. Insider wallets purchased large amounts of YZY before its public launch, including an insider wallet, which knew the contract address in advance, according to blockchain analytics firm Unchained. Coinbase executive Conor Grogan noted on X that insiders appear to control more than 90% of the supply. The token's terms include a class action waiver, preventing buyers from joining lawsuits over disputes. "If you're buying this, you are literally giving them permission to rug you without consequences," wrote pseudonymous crypto trader Dami on X. Turning to Asia, China is weighing a dramatic policy reversal. China is considering the approval of yuan-backed stablecoins, signaling a sharp reversal from its 2021 ban on cryptocurrency trading and mining. According to Reuters, the State Council, which is China's cabinet, will review a roadmap later this month that could authorize their use to promote the wider adoption of the yuan in global markets. Hong Kong and Shanghai will be the main cities to fast-track local implementation of this plan, according to Reuters' sources. China is establishing an international operations center for the digital yuan in Shanghai, while Hong Kong recently enacted the Stablecoin Ordinance, which positions the territory as one of the first markets to regulate fiat-backed stablecoin issuers. Huang Yiping, an advisor to the People's Bank of China, recently told local media that an offshore yuan stablecoin in Hong Kong is a possibility. The effort aims to counter the dominance of dollar-pegged stablecoins, which account for most of the $280 billion global stablecoin market. The yuan represents just under 3% of global payments compared to the US dollar's dominance of 47%, according to payment platform SWIFT. If approved, the plan would mark China's most significant move yet toward using blockchain-based finance to support the yuan's internationalization. Back in the United States, Gemini is preparing for Wall Street. Crypto exchange. Gemini filed an S-1 registration with the U.S. Securities and Exchange Commission to go public on the NASDAQ Global Select Market under the ticker GEMI. Gemini, which was founded in 2014 by twins Tyler and Cameron Winklevoss, has yet to disclose the number of shares or price range. Financial services firms Goldman Sachs, Citigroup, Morgan Stanley, and Cantor will lead the offering. In the same week, the twins announced a donation of more than 188 bitcoins, valued at about $21 million, to the pro-Trump Digital Freedom Fund, PAC. In the announcement, they make a push for various pieces of legislation, including a skinny market structure bill that is lean and mean, and a Bitcoin and crypto bill of rights, which codifies the right to own, self-custody, and transact peer-to-peer, P2P, with Bitcoin and crypto assets. Tyler Winklevoss on X said, "The mission of the @Freedom Fund PAC is to help realize President Trump's vision of making America the crypto capital of the world." And in another first for U.S. markets, Bullish broke new ground. Crypto exchange Bullish settled its $1.15 billion initial public offering entirely in stablecoins. The listing, which closed August 14 and debuted on the New York Stock Exchange, marks the first time a U.S. IPO has been funded without traditional cash. The transaction was managed by investment bank Jefferies, which oversaw the minting, conversion, and delivery of tokens across multiple blockchains, primarily Solana. Most of the proceeds were settled in Circle's USDC and custodied by Coinbase. Other stablecoins used included PayPal's PYUSD, Ripple's RLUSD, World Liberty's USD1, as well as euro-pegged tokens from Circle, Societe Generale, and AllUnity. Bullish's chief financial officer, David Bonanno, said in a statement, "We view stablecoins as one of the most transformative and widespread use cases for digital assets. Internally, we leverage them for rapid and secure global fund transfers, especially on the Solana network." Meanwhile, one U.S. state has made history with its own digital dollar. Wyoming has become the first U.S. state to issue its own stablecoin, unveiling the Frontier Stable Token, or FRNT. The dollar-pegged token is backed by U.S. cash and short-term treasuries, with an additional 2% over-collateralization. Custody and reserve management are handled by Franklin Advisors, with monthly attestations from the Network Firm, which is a crypto accounting firm. FRNT launched this week across 7 blockchains, including Ethereum, Solana, and Base. Issuance and interoperability are supported by Layer 0, while Kraken and crypto card platform Rain will be among the first platforms to offer the token to the public. The rollout follows passage of the Genius Act, the first federal law regulating stablecoins, but exempts state issuers from direct federal oversight. Goldman Sachs projected in a report released on Wednesday that the stablecoin market could swell into the trillions, with Circle's USDC alone potentially adding $77 billion by 2027 as new U.S. laws fuel adoption. On the startup front, a high-profile founder is stepping away. Jason Zhao, co-founder of blockchain startup Story Protocol, has stepped down from his full-time role just 6 months after the launch of its native token, IP. Zhao will remain involved as a strategic advisor while shifting focus to his new artificial intelligence company, Poseidon. The move has fueled criticism within the crypto community. Anthony Sassano said on X, "Another L1 founder exits after producing absolutely nothing and making a lot of money in the process." Adam Cochran of Cinemain Ventures added, "It's so disheartening that even the top VCs just seem stuck on this loop of rewarding flash over substance." Story Protocol has raised about $143 million, with a valuation of around $2.25 billion as of its latest funding round led by A16Z, though blockchain data shows minimal fee revenue to date. Turning to corporate hiring news, Tether is building out its U.S. strategy. Tether has appointed Bo Hines, the former head of President Donald Trump's Digital Assets Advisory Council, as a strategic advisor to guide its U.S. expansion. The move comes just weeks after Hines stepped down from his White House role. Bo's appointment demonstrates our commitment to building a strong U.S.-based presence, said Tether's CEO Paulo Arduino, noting the company's focus on both digital assets and domestic infrastructure investments in a statement. Alex Kruger, trader and co-host of Unchained's Bits and Bips, wrote on X, "Tether is now king. The world is drooling about it. They are everywhere and even hire talent straight out of the White House." Tether plans to launch a U.S.-focused stablecoin later this year, and in Washington, the Treasury Department is asking for public input. The U.S. Treasury Department is seeking public input on new methods to detect illicit activity involving digital assets as part of the rollout of the recently signed into law Genius Act. The law, enacted in July, created the first federal regulatory framework for stablecoins, requiring issuers to hold full reserves, undergo annual audits if valued over $50 billion, and comply with new licensing rules. The Treasury's request highlights potential tools such as artificial intelligence, digital identity verification, and blockchain-based monitoring. Treasury Secretary Scott Bessent said on X, "Stablecoins will expand dollar access for billions across the globe and lead to a surge in demand for U.S. Treasuries, which back stablecoins." Comments are due by October 17th and will inform future reports to Congress that could lead to additional rulemaking. At the same time, industry and law enforcement are joining forces. A coalition of major crypto firms and law enforcement has launched the Beacon Network, a real-time system designed to stop illicit funds before they can be cashed out. The initiative, led by blockchain intelligence firm TRM Labs, includes industry titans such as Binance, Coinbase, PayPal, and more than a dozen others, as well as global security researchers and federal agencies. The platform provides 4 core services: flagging suspicious addresses, propagating those alerts across the network, notifying exchanges instantly when suspect funds arrive, and enabling rapid reviews to freeze deposits before withdrawal. Membership is free for verified exchanges and law enforcement. Coinbase's head of anti-money laundering, Valerie Leila Jaber, said there's no program like Beacon Network, while noting that access to real-time intelligence is a game changer. Kraken's chief compliance officer, CJ Rinaldi, added that protecting consumers requires seamless collaboration across industry and law enforcement. TRM Labs estimates that since 2023, more than $47 billion in cryptocurrency has flowed to fraud-related addresses. In banking, SoFi is turning to Bitcoin's Lightning Network. SoFi Technologies is set to become the first U.S. bank to offer international remittances using Bitcoin's Lightning Network. The NASDAQ-listed fintech Forward Bank announced a partnership with Lightspark, the Bitcoin infrastructure company founded by former PayPal and Meta executive David Marcus, to power real-time, low-cost transfers through its app. The service will launch with support for remittances to Mexico, with additional countries planned. Customers will be able to send US dollars directly from SoFi's app, while recipients receive local currency deposits abroad. Transfers will show upfront exchange rates and fees, aiming to address common frustrations in traditional remittance services. The rollout marks SoFi's return to crypto services after suspending them in 2023 during its transition to a national bank. And finally, one controversial group is shifting its focus. The group behind last week's 51% takeover of the Monero blockchain has voted to make Dogecoin its next target. The Cubic Network, an AI-focused blockchain project founded by Sergey Ivancheglo, revealed that more than 300 members chose Dogecoin in a community poll, far outpacing votes for Caspa and Zcash. Cubic recently gained majority control of Monero's hash rate, successfully reorganizing 6 blocks in what it described as an economic attack. Following the incident, Kraken suspended Monero deposits, citing risks to network integrity. Dogecoin, with a market value above $35 billion, currently operates at about 2.23 petahashes per second, a fraction of Bitcoin's 964 exahashes, and is what makes the network more susceptible to 51% attacks. Since 2014, Dogecoin has shared security through merged mining with Litecoin. Litecoiners support Dogecoin. Always have, always will. The Litecoin community posted on X, affirming its backing amid the new security concerns. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and Pam Majumdar. Thanks for listening.